It's so surprising. How can two people think in a similar manner? I'm so surprised. After
Yeah.
your presentation, I'm going to show you my template and you'll be shocked that how can we think in so similar manner? Anyway, let's take some other stock. Let's talk about SDFC. So, can we, uh, okay,
What's the ticker if you could spell it out?
HDFC. So you can just type HDFC,
Is that S?
H,
Oh, sorry. H
HDFC,
H H
H. Because
H
this
D
has
F
been an
C.
underperforming stock for some time. Yeah, this one. Hello, my dear friends. This is your friend Vivek Bajaj, co-founder of StockEdge and Elearnmarkets. Welcome to yet another face-to-face global. And again, this is going to be one of my favorite ones. I'm so blessed to have received knowledge and wisdoms from so many face-to-face guests, especially the ones who have accepted to lend their knowledge, to give us their knowledge with respect to Indian market. People who are sitting outside, they've started exploring Indian market as well, and they are finding it equally exciting. This face to face is special because this face to face with a guest who is actually very special. He does similar kind of a work in US. He's a real trader. He has developed some phenomenal tools to help traders to make money from market, and he does this what I'm doing. So really excited. It looks like I have someone like me in US, and I'm interacting with myself in US. So let me welcome the guest for this face to face, Richard Moglen. Hello, Richard.
Hey, how's it going? Thank you so much for the invitation, and yeah, it's very cool to reach across the entire world and see somebody doing very similar things. So thanks so much for having me.
Thank you so much. Thank you for thank you for being here. And when I was thinking about you, by the way, I watch all the videos, all the recordings which you have done, and amazing. This is real stuff because real market people talking to real people really
Right.
produces real stuff. So thank you for doing this. How many years you have been recording interviews of traders?
Yeah, so I started that in spring of 2020. Around that, I did my first one, and since then, I think I've done over 100 interviews with traders. I know you've had some of the same guests on your show, which is awesome. Ryan, I watched that one; that was fantastic. Ryan Pierpont. But yeah, I started in March of 2020, and yeah, just kind of been doing it ever since. We've also done some conferences over at Traderlion completely free, where guests come in and do presentations, and I do host. I do host that as well. So yeah, it's definitely sped up my learning curve immensely, and I think it's helped a lot of traders out there.
It's so surprising that we also do conference. We did face to face Goa conference, Bangkok conference, and which was an extension of what we are doing here. This is so amazing. How can two people think in a similar manner?
Yeah, so funny, so funny.
Well, to know more about what you are doing now, I also need to know about what you have done historically. So
Sure.
please do share with us your history, how you started your journey in market, what age you started, what year you started, and how has been that journey of the market for you?
Yeah, that's a good question. So I probably don't have, the traditional studying finance in college route and getting interested in the markets that way, or, my parents didn't get me involved in the market. I actually have a background in mechanical engineering. That's what I studied at the University of Maryland. That's what I got my undergrad in, and that's why I studied for a little bit in graduate school, working towards a master's. But how I got interested in the market is my junior year at Maryland, my university. I took a class taught by someone who's been trading for over 50 years. His name is Dr. Eric Wish. He's on Twitter at Wishing Wealth, if you want to check him out. And that class is basically called an Introduction to the Stock Market and Technical Analysis. And it basically covers the fundamentals, teaching the CAN-SLIM methodology, which is developed by William O'Neill. Some
Mm.
of your viewers may be familiar with him. He's written an excellent book, which I highly recommend everybody read, How to Make Money in Stocks. It's about the American markets, but it definitely applies to all markets as well. So definitely check that out. And part of that class was a simulated trading environment where we had to develop our own strategy, write entry rules, entry criteria, how to pick stocks, how to sell stocks. We had to answer all those questions and actually competed in a little bit of a contest here. And you learn so much by doing, you can learn the theoretical stuff, but until you actually do a simulation and definitely do the real thing, do real trading, you're not going to really learn those lessons, which you have to improve and just get a little bit better with each time. So I took that class. It was an elective, but I loved it so much. I was a TA the next 4 semesters or something until I finished college. I'm still in close contact with the professor. I just actually visited him during my Thanksgiving break over here just a few weeks ago. And yeah, it's a really special class. And from that point, I kind of realized that this type of knowledge and resource wasn't available to everybody. If you weren't able to attend the University of Maryland and take that class, you might never even learn how to do this stuff. So basically, I started a YouTube channel to teach those concepts in a way that could be a resource for everybody. Yeah, it's been super fun. It's helped me accelerate my learning curve. I've been trading now since 2018. Learning every single year. There's been some interesting times during the past few years here. So yeah, it's been a learning experience, but I love it. My mechanical engineering background, I think, helps me actually a lot when it comes to trading. We're all about iteration. We're all about having a disciplined process and creating a system, and that translates super well over to the market. So yeah, that's a quick run through on myself, and also I should mention, it's going on 2 years now. I joined Traderlion, which is a trading education business. I'm the director of education over there. I help create all the videos, material, our master classes with traders like Stan Weinstein, Oliver Kell, who's the U.S. investing champion of 2020. So all that side of things as well. I love teaching. I've been a soccer coach, football coach in the past. So that kind of combines my 2 different passions. So yeah, that's a bit about me, but I'd love to answer any follow-up questions or go more specific in anything you wish.
Yep. It's a great journey you had so far, and it's a long way to go. I'm sure you're going to be one of those really look after people, top 100 people when world is going to write books about them. So tell me, 2018, when you literally got into the market, and we are in 2022 and 2023 almost, what has been your experience in terms of evolution of the market? Have you seen major changes which has happened character-wise in the market?
In the market, not so much. In my own interpretation of the market, for sure. 2018, I had no system. And basically what I learned in 2018 is that you need a system because in the US markets in 2018, we suffered a pretty significant drawdown into the end of the year, which brought my Roth IRA down. I'm not quite sure how much, but I was just in index funds at that point and trading a little bit, trying to learn that. So I basically realized that I needed a process. I needed to figure out a better way. So that's kind of what I learned in 2018. 2019, I took the class. I gained a little bit more knowledge, started really trading on my own. And then that really set me up well for 2020, protected myself during the decline in March 2020, of course, because of the COVID correction, and really stepped on the gas and was able to take advantage of a lot of really great opportunities in the US markets in 2020. There's some fantastic growth stocks and bases and just great opportunities based on how I interpret things. And that year really taught me to focus on the leaders, stick to your process, look for those kind of game-changing companies that are changing how we work, live, and play. And I think we'll touch on that later on as well. Yep. And then also use technical analysis to find precise entries where you've got a great risk reward. You're expecting the stock to break out, and you've got a clear level where you can place your stop loss. So if you're right, you can ride that trend until it ends. But if you're wrong, you're stopped out for a very small loss, which is definitely part of the name of the game. 2021 was definitely a little bit more interesting because even though the indexes went up, a lot of the moves had really come in 2020 in the US markets. So it was choppier. You kind of had to switch up your style a little bit. I learned a lot there about, trying, not over trading. That's a key thing that I learned that year. And then this year, once again, was able to protect myself pretty well, just based on listening to the market, listening to what the market leaders are doing. Learning a lot during this bear market. This is the most extensive one I've experienced, and it's the most extensive one since 2008, 2001. That's kind of been a little bit about my journey and my performance. But in terms of, how the market's changed, This is kind of the same thing that repeats itself over and over again based on human psychology. We've
Mm.
got these amazing runs in the market, and then we've got bear markets that come along, kind of reset everything's, and that sets up a new batch of amazing opportunities that we can take advantage of as investors, as traders, whatever your time frame, whatever your style. So yeah, that's kind of what I'd say.
Okay. We talked about Traders Lion, and I'm one of the avid user of one of the indicators in TradingView. So we are going to talk about all the indicators which Traders Lion has hosted in TradingView. So that is going to be bonus for us. But before I, go to that presentation which you have created for us, a phenomenal one, let me take some useful inputs from you with respect to your interviews you have taken with over 100 people, right? What's the top 5 learnings you have received from all these interviews?
Yeah, I've actually got a slide on that. So do you mind if I bring that up?
Yeah, of course. Please do
There we
share.
go. Yeah, and for everybody watching, if you'd like a copy of these slides, I'm happy to give them out for free. Just shoot an email over to my email, richard@traderlion.com, and that's also the mentorship group and company that I'm part of. If you want to check that out,
Sure.
and with regards to those key lessons, yeah. So I've been really privileged to get to talk to a lot of amazing traders about their process, their backgrounds, their lessons, the mistakes they made early in their careers, and their entry criteria, sell criteria, and taking a step back, despite differences in time frame, in style, the stocks they like to trade, a lot of them kind of have the same kind of pillars and key things that separate them from the rest and allow them to be successful. So distilling these into kind of 5 key lessons. The first one is stick with it and put in the work. You have to study history. Now, I kind of caught the trading bug when I took that class at Maryland, and I think a lot of the great traders who I've interviewed kind of have that passion for the markets that allows them to kind of move on and past any mistakes they make or any tough trading periods they have. I think really loving this and not just loving the results, but loving the process is super important, and that allows you to get through those rough patches. And you also just have to put in the work. You have to, read the books. You have to actually trade and make mistakes yourself that you can then learn from. And studying history can really accelerate that because, there's so many great traders out there that have written great books and shared like problems that they've experienced, shared their processes, and we can kind of build on that knowledge base and kind of start at that level versus starting all the way down here. So I'd highly recommend putting in the work, reading some great books. I'll name a few off the top of my head. I already mentioned William O'Neill's How to Make Money in Stocks. That's excellent. I'd also recommend Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. Nicholas Darvis is a favorite trader of mine. How I Made $2 million in the Stock Market. That's excellent. And Oliver Kell's book is also quite good. And in terms of trading psychology, I'd highly recommend Jared Tendler's Mental Game of Trading and also Trading in the Zone by Mark Douglas. Those are really great books. And just reading those that I listed, I think will really set yourself up nicely. And especially if you're more of a beginner at this. So moving on to number 2, focus on the best stocks and the best setups. I think there's a feeling, especially with newer traders or investors, that you have to be active all the time, right? You have to be trading. You're a trader. That's your job. But in reality, what you want to do is, I'll call it trade like a lion. You want to be very lazy and just be sitting back and waiting for the right opportunity and only actually being active when the overall market conditions are right, the industry groups and sectors are setting up nicely, and the individual stocks themselves are golden opportunities. They're game-changing companies, and their charts are perfectly aligned for how you'd like to trade. Until that happens, you're just kind of forcing C- setups, and often that's going to get you C- results. In the market, we have the kind of luxury to wait and then pounce exactly when the iron is hot. I like to use a baseball analogy. I know you guys most likely like cricket, but basically in baseball, you can wait for as many pitches as you want until one comes right to that sweet spot, and that's when you want to take the swing. So I think that's really important, and focusing on the best stocks and setups, that's going to help your performance immensely, and try to limit those needless losses in those not so good setups. Number 3, I think, is really important as well, and I kind of touched on this a while back. You want to establish trading rules for your process, and this includes buy rules, sell rules, how large are your positions going to be, when are you going to do post analysis, how are you going to assess the market conditions. You have to kind of answer all those different questions. And basically what you should aim to achieve with these trading rules is they should be precise enough that another trader of a similar ability should be able to follow them and pretty much do your routines, do your process, and come up with similar, if not the same, setups or ideas to trade. So basically, think about all the questions that you have when it comes to trading. How am I selecting stocks? What does my setup look like? How do I manage risk? That's a huge one. And we'll touch on that in just a second. As I mentioned, what's my position size going to be? You want to define all these things so your actions are very repeatable. They're following a rule set. You don't want to be random in the markets. That's where things kind of come back and hurt you. You want to have that process, and maybe this rule ends up not being the right rule for you, and later on you realize that and you make a quick change or an edit here. That's fine, but until you have that initial rule set, I think you're not quite prepared to be in the markets. And I would say everybody should have a written set of rules that they follow, and then they can always come back and change them and update them as they change, they adapt and evolve as a trader or investor, or even the market evolves as well. There's always something more to learn. But until you have that trading rule set, I think you really have to make sure that that's a priority for you.
Sure.
Yeah. And lesson number 4, which I touched on before, manage risk tightly and use stop losses. When it comes to the biggest theme and the biggest mistake that all the traders who I've interviewed mention is that they let one trade or a few trades, or they were trading during a period where they were not managing their losses. They weren't using stop losses. They weren't adequately managing risk. They were sizing too large. They basically weren't keeping risk in check. And this is kind of the number one thing that we can control in the market, is how much we're going to lose on any given trade. And you want to set it up in a way where, as I mentioned before, we're entering at a spot in the chart, in the stocks movement, where if we're wrong very small with a small percentage loss. But if we're right, that potential reward is definitely worth a multiple of that initial risk. So if you can enter at a spot where there's a 2-to-1 potential reward to risk ratio, or 3-to-1 or higher, that's ideal. And that's going to set you up for success, because what that allows you to do is you don't have to be right all the time. You don't have to be right 90%, 70%, 60% of the time. Instead, the kind of edge is in that risk reward relationship, where your gains pay for multiple small losses and then some. And that's how you can really make progress. And that's really, really important.
So I have
yeah, go ahead.
I have a few questions in this. The risk reward ratio, it's a very interesting topic and most talked about topic. So when you've interviewed many people, what's a typical success ratio you have observed? Is it around 30s or 50s or 70s in terms of number of trades which have been right for them?
Yeah, that's a great question. That's exactly what I was going to say. So yeah, it's very interesting. I think on average, I would say the batting average that a lot of people have, which is the percent of trades which end up being winners, is maybe a little bit under 50%, maybe a little bit above 50%, but around then. Depending if they're kind of a swing trader or a position trader. Position trader meaning you're trying to hold a position for weeks to months. Swing trader more a few weeks at max. Often the swing traders will have slightly higher batting averages, but they're the flip side to that is that they're often taking smaller gains as well. So there's kind of a balance there. But yeah, I would say the longer term position traders, Ryan Pierpont, I think you talked with him about this potentially. His batting average is in the 30s, but he's able to do phenomenally well because his reward to risk ratio is superb. So that's kind of what I would say about that. But you definitely, I think there's this misconception in the markets that you have to be right 90% of the time to be a good trader, and that can be further from the truth. The best traders I've interviewed, are right about half the time in a good market.
Okay. And what has been the best risk reward ratio you would have heard, and you would have kind of blown away that, wow, how can it be possible that you have this kind of a risk reward ratio?
Yeah, I don't know if I have a hard number for you, but some people really like to take, just just 5 to 1
Okay.
reward to risk ratio, and then if their batting average is anywhere close to 50%, they're doing phenomenally well. But that's often in the best of the best markets, like a market like in 2020 that
Yeah.
cleans up our mistakes. So that's not going to happen every year. It's kind of those special events.
Okay. And how many people you have observed are making much more money when market is in bear market, or most of the people are making money in bull market only?
Yeah, of the people who I've interviewed, it's definitely the majority of the gains come in the bull markets.
Okay.
That's when the tides are kind of with us, and a lot of the traders I've interviewed are pretty much long only, meaning they only like to trade stocks in uptrends. But some of them do shorting as well. But shorting is a little bit more volatile. It's quicker, and the potential reward is a little bit less as well. So I would say most of the people who I've interviewed, their style favors strong bull markets where there's nice trends that they can ride versus corrections or bear markets where everything is a little bit choppier and volatile.
Okay. And is most of the people trading stocks, or people also trade very actively in indices?
Yeah, most of the traders I've interviewed are pretty much stocks only, and a little bit of options here and there, but mostly just stocks.
Why is it so? Is it because your preference is only to interview people who are trading stocks?
Yeah, it's not my bias, but it's kind of the people who I've interacted with on Twitter the
Okay.
most, and kind of trade my style. That's kind of what I do. I trade just stocks.
Oh, okay.
Yeah, so I'd actually love to interview people. I've been looking for interviews of people who do futures, options primarily, but I'd love to get their views as well because it might be a little bit different on all of this. But at the moment, just most of the traders I've interviewed happen to primarily trade just shares of stocks.
Sure, sure. Got it. Please
Yeah.
continue.
Yeah. So just the last step here, key lesson number 5, conduct post-analysis, identify your weaknesses. So post-analysis is basically when, you've got a decent size, a sample size of trades, say, 20 trades, 50 trades, 100 trades, and you look back and analyze each of the one. You can calculate your risk reward on each of them. You can calculate your batting average. Those are really helpful metrics to have. But you also want to take a look at your actions. And was your entry right? Where did you set your stop loss? Was that correct? Did you sell properly? And it's not all about whether you made money on that particular trade, because you can trade badly and still make money, or you could even trade well and lose money. But you want to be following your process and making sure that it's repeatable, and it's following your rules. So you want to basically ask yourself, based on the information I knew at the time, was this the correct action at this point? Does it follow my rules? So do that. Mark up your buys and sells on each of these different stocks. You can do this, some people do it every week, which is fantastic. Some people do it every month, every, half year, whatever kind of works for you. But I would say the more the better, especially if you're newer at trading. But doing this allows you to kind of identify what you're doing right, what you're doing wrong, and that basically tells you what you need to improve upon. And then you can take that information and apply it to your new trade. So it's kind of a feedback loop. And I think having this is so important, because a lot of people, they get a loss, they feel badly, they feel dejected, and yeah, they don't want to look at that chart. They don't want to look at their error, right? But that's where the learning comes from, is making that mistake and learning from it and making sure you don't do it again, right? So it's so important to look at both your losses and your winners and identify what you're doing right and what you're doing wrong, and especially what you're doing wrong. And doing this over time will just allow you to get a little bit better every single year. And that's the goal, just become a little bit better of a trader every single year and perform a little bit better. So yeah, I think this is, one of the most critical lessons that I've learned from interviewing all these traders, is all of them looked at their past trades, identified their strengths, their weaknesses, and use that information to inform them on what they can do to become an even better trader.
Awesome. So this screenshot is going to be part of my printout in front of my desk all the time. I think this is a great early morning revision one needs to do to prepare himself or herself for the market today. Thank you.
Absolutely.
Thank you for sharing this. Now let's go to the second part of our discussion, which is around your strategy, traders line, indicators. Very excited for this one as well. So please go ahead.
Yeah, so over at Traderlion, what we basically done is developed overall, I think 5 different indicators that people can use for free over on TradingView, which is a charting platform. I'm sure everybody's pretty much familiar with it. And a lot of these are catered towards, swing trading, position trading, but really I think they can be applied to any style. And as I mentioned, they're completely free. You can find them over here on our website, traderlion.com/tradingview scripts, or if you just Google search Traderlion TradingView scripts, I'm sure you'll be able to find a link that way as well. Today we're mostly going to talk about the relative strength line as well as the enhanced volume. I know that's a favorite of yours, so we'll definitely talk about that. But we've also got a few others like the TradingView key moving averages, which is basically using, it's basically a trend indicator using different moving averages, and then reversal bars identifies kind of key turning points in a stock as well. So we can talk about them theoretically, but I think the best way to explain them is actually to look at a stock. So let's go ahead over to TradingView and talk through them. And this will take me just a moment here. Let me know if you can see this all right.
Yes, I can see the chart.
Yeah, so this is M_M. I'm not super familiar with the Indian stocks.
Mahindra and Mahindra. I'll give you a briefing about all the stocks, and thank you so much for taking Indian stocks as examples to understand it properly. Thank you.
Yeah, of course. I think, are they an auto manufacturer? Is that correct?
Yes, absolutely.
Yeah. So very cool. It's cool to look at their stocks because they're different, but of course they trade the exact same way because it's human psychology. So getting into the indicators. I'll hide this for now and we'll just talk about the relative strength line. So,
if you can also, if you don't mind, can we start from the beginning where we show them how to insert this indicator?
Yes, I was about to cover that. So in order to just get these TradingView indicators, what you want to do is go up here to indicators and you want to search for Traderlion, and that will bring up a bunch of different options. Here are the community scripts. You've got Traderlion's relative strength line, enhanced volume, reversal bars, price labels, and then those moving averages that I talked about previously. So we're going to focus on primarily is relative strength line and enhanced volume. And once you decide which one you want, you just basically click it. It would be added to your chart, and then you could reorganize it, move it however you wish. I've already got mine set up here, and I'll X this one out right here. So this is the relative strength line here. I've also got a plot of the Nifty behind it, so you can kind of see how the index was performing over time as well. And what this line is basically a representation of whatever stock you're looking at and how it's performing versus this index that you're referring to. And quickly, I think it's important to mention when you add it, you want to make sure that you calculate the relative strength versus.
Richard, sorry to bother you, but is it possible that we zoom in because the text size is very, very small?
Yes. Yeah. No problem.
Yeah, this is better.
Is this better?
Can we increase one more if you don't mind?
Yep.
Yeah, this is better. This is perfect.
That's a lot better. Okay. Yeah, I'll take it from the start here. And it's also important when you add that relative strength line to your chart to go over to the settings. And if you're trading the Indian market, you want to make sure that it's calculating this relative strength line versus the Nifty or whatever index you'd prefer. So that's pretty critical. Otherwise, you'll be calculating it versus a US index, which might not make sense for that stock. You can also change different values down here. But let's go ahead and talk through what the actual indicator is. So the way this line is calculated at any single point is it basically just takes the price of the stock and divides it by the price of the index at that point. And then you can use the line to compare to how it's performing, at another point where you do the same thing. You calculate the line by dividing the price divided by the index. And based on how this line is moving, the stock is either outperforming the index or underperforming. If this line is an uptrend, that means that over that sample size, over that period, the stock is outperforming, and that's when we want to be involved. Or during a period where, back in this area, the market was actually outperforming the stock, and that's when we want to kind of leave it alone and look for other opportunities or just be back in cash. So here you can see that at this point, we start a new uptrend. And if we go to this point on the chart and just do a little measurement here. At
mm,
this point, we're up 67% from when we start that relative strength uptrend,
mm,
and
mm,
that's awesome. So I always want to see that we're in a relative strength uptrend, and then I want to look for opportunities within the individual stock itself. So
mm.
any questions or follow-up questions or things we
Yes.
should talk
Yes,
about
one
here?
question. The line below the relative strength line, which is the
Yeah.
parallel line, yeah, this one, is it a smoothing line? Is a moving average or something?
Yeah, exactly. So if you
Okay.
go back to the settings, I believe it's a 21 EMA on the relative strength line, and that's basically how
Okay.
we determine whether it's in an uptrend or downtrend. If it's above
Okay.
or rising 21, we're in an uptrend. If we're below it, then we're in a downtrend. So great question.
Okay. And any specific reason why you have taken 21?
So the 21 EMA is something that I really find helpful for my time frame. It's a great kind of intermediate trend tool. Often stocks will start their uptrend by retaking it, and then they'll kind of hold that until the next downtrend. So it's
Mm,
just something it's a good reference point. It's about a month's worth of price action as well. But specifically if you're using a 20 versus a 21 versus a 23, it doesn't really matter too much. It's just about having a reference point for that current trend.
sure, sure. Got it.
Yeah.
And the same 21 you're going to use on price action as well to figure out whether the trend is continuing or not?
Yeah, exactly. So on my charts, what I have set up is a 21 EMA in green
Mm,
here, a 50 simple in blue,
mm,
which a lot of people use, and then a
mm.
200-day simple in black here, which a lot of people use as well. So these are kind
Sure.
of the three main moving averages I use in my trading.
Sure, sure. So this is an indicator which helps us, gives us an indicative view about that stock. Now, how do we convert this into a strategy? Like what should be my process to enter and exit?
Yeah, great question. So that kind of goes back to what I was saying about looking for a stock that is in a relative strength uptrend.
Yeah.
What we want to do is when a stock is correcting and when the market is correcting, we
Mm,
want to be finding those stocks that are outperforming the market, that are
mm,
being accumulated, that are being supported by mutual funds, hedge funds, all of those. So they're taking advantage of that market weakness to build their positions in stocks that they find really promising. And what happens with these stocks that are being accumulated is that we'll start to see evidence of that on the chart in that relative strength line. So the relative strength line might be in an uptrend, even when the stock is in a downtrend, because that stock is outperforming the market so much because of that support. So how to convert this into a strategy? Very simply, look for signs in the relative strength line that the stock is outperforming the market, meaning
yes.
we're above that moving average. This pink dot here as well means that the relative strength line is making a new high before price. If we take a look at this point on the chart, you can see that the relative strength line is making a new high versus this peak, while the
Mm,
price is still well below this prior peak. So that's
mm,
showing you that the stock is really outperforming because the relative strength line is leading the price action higher. So I always really want to look for this right before a potential breakout in a stock. Then on the flip side, on the sell side, you want to basically follow that trend until the relative strength line starts declining or the overall stock starts breaking down a little bit. So, looking at this period, during here, we're kind of consolidating. We break below the moving average a few times. The moving average in general is flattening overall. And then here, we really start a trend downwards. So since kind of this period here, you'd be kind of looking for an exit point because the trend has kind of changed a little bit. It's not broken completely, but it's not quite as powerful as this right here. So that's what I
mm.
would kind of say.
Fair point. Fair point. I think when we take more examples, this concept will be further clearer.
Yep, absolutely. All right. Should we go ahead and talk about the
Yeah.
enhanced volume now? All
Yes,
right.
please. Yeah.
All right, here we go. So this is basically, it's using volume and then highlighting key kind of character changing volume. So looking at this indicator, and I'll hide this for now. Actually, I'll show that. That's no big deal. So looking at this indicator, you might notice these big spikes in green and then small orange bars here. And that's really the key things that you want to take a look at.
Mm,
When it's in green, it means that it's significant above average volume. And what that is basically an indication that it's institutional volume where, so many shares are being bought that it has to be from hedge funds, big money managers. And that's volume that can really move a stock and lead to big moves and big trends. So whenever you see big green volume like this, you want to pay attention,
Mm.
especially when it happens at a specific, point in a stocks chart where we're seeing a breakout, which we'll talk about later on as we go through the actual stocks chart. Then the other thing you want to pay attention to is orange volume down here. So orange volume is basically the flip side of the green volume. It basically represents a well below average volume. So when a stock is consolidating or pulling back or declining slightly, we want to see that happen on lower volume, because that tells you that it's not really the large hedge funds who are distributing stock. They're not really selling yet. It's just kind of normal profit taking, normal oscillations when within a stock's move. But if you see a stock really break down on huge volume, that's when you want to get worried. But if it's orange or it's a kind of consolidation period here, the stock is just kind of going sideways over the course of 2 weeks. We see a lot of times where, volume is much lower than usual, and then we break out once again on huge volume. So this is just kind of a consolidation period, and then basically the stock continues its trend. So that's kind of the two main things that we want to pay attention to. And then this purple line, I believe, is the 50-day moving average on volume. So that just gives you a reference point for what normal volume for that stock is. And once again, you can see that during this 2-week period, we're well below average on almost all the days. So that's kind of looking at this here. And then we've got a table here, which also provides additional information. What was the volume? What is the average volume? What is the average dollar volume, which is basically the share price multiplied by that average volume. That gives you a sense of how many dollars are traded in a stock every single day. The up-down volume ratio is an interesting metric. It basically looks at the previous 50 days and sums up any volume that occurred when the stock made an increase on a day, so up volume, and then does the same thing for any volume on down days, and then divides the two. And what you're looking for here with this metric is ideally above 1, and ideally 1.3 or higher. I'm sure in this area, if we take a look back and looked at this back in this period, the up-down volume was much, much higher because of these huge spikes in volume. So we always want to look for above 1 with this metric. Then we just got the percent change here, and then the volume run rate as well, which gives you a sense of, on a day, how was volume compared to normal. And really early in a trading day, when you're looking for a breakout, if you see that starting to occur and the volume run rate is well above normal, 100%, 200%, that tells you that likely it's going to be a day like this with huge, huge volume. And that gives you a little bit more conviction that it's okay to be involved, and it's going to be a strong breakout. So yeah, that's a quick run through of this indicator. I'm sure you've got some great follow-up questions as well.
Yes, because I've been using this indicator, so there's a couple of things which I was always willing to ask. And when I read your literature in the website, I think there are a few things which is not known to public and large. So maybe I'll try to get some information from you. So if you look at the important volume bars, there are some text, the percentage, this and that. So basically, this represents how much percentage is higher volume vis-a-vis historical. Could you give us an idea that what kind of historical volume we are looking at to make a judgment about importance of this bar?
Yeah, so on these bars, you want to look for as large as possible. The higher, the better. But in terms of this percentage, I'm not sure if it's calculated versus looking at the previous 50 days or just using this average here. But yeah, if this is plus 230%, this is very significant volume. We can see even back here that there are even bigger spikes. So in short, just the higher, the better. And that can really be game-changing volume.
Yeah, that is precisely I also follow. But then I always was wondering that what is this percentage? What is the basis of calculation of this percentage? I know that is proprietary. It was mentioned in that website also that there are certain things which we do which we can't disclose, so which is perfectly fine. Second question is that green is very apparent. We know that, and we always have a propensity to buy first, right? But what about prices going down? I can see that the color which has been used, or while in our discussion also, we didn't talk much about those days when the sell volume was high. So any specific thought that why we are not so much looking at selling volume?
Yeah, that's a really good question. And it's something that we could, include in a future update and make it much more important. But I think here, there's a lot of reasons for really high volume to the downside. It could be options expiration, that type of thing. You can see on this day, there was some price action move. We had a failed breakout, but it wasn't super significant a day. What we're really paying attention to is those breakout points and what is volume coming in at those areas. And that's what the green bars kind of tell us. But if you see a stock break a moving average or break below these lows on really large volume, on really large red volume, that's also telling you something that those institutions might be selling. So it's a good point. I think in a future update, we should highlight those significant days where it's selling volume as well.
Okay. Actually, let me rephrase this question. What I wanted to get a sense from you is that the buying behavior is easier to locate than the selling behavior, because buyers always have propensity to buy fast. But the big institutions, when they are selling, they typically sell in a very distributed manner. So you will not see, very big towers of selling, but you will definitely see big towers of buy. Is my judgment correct?
Yeah, I view it the exact same way. Obviously, there can be big sell bars, but it doesn't have to be. You're absolutely right. And Stan Weinstein, who we worked on in the Masterclass previously this year, he views it the exact same way, and he's been trading for 55 plus years now. He does on breakouts. He absolutely requires big breakout volume bars like this. But to the downside, when you're looking to short or just get out of a stock, you don't have to see that large volume, because stocks can kind of fall in their own weight. When there's not a lot of accumulation, stocks can just fall by themselves and suffer large declines even without a big burst in capitulation volume. So I 100% agree.
Sure. Great. Yeah. Please continue.
Yeah, I mean, that's just kind of a quick run through of the indicators. I don't have too much more to say, but I'd be happy to kind of go through this chart and kind of talk about what I look for and how also I would trade this as well.
I'm just trying to be more selfish and demanding from you, but really keen to know about other two indicators. If you can just plot and give us only 5 minutes view on those two indicators also.
Yeah, let me go back here and do this. So the key moving averages, it basically just plots different moving averages that we use at Traderlion that basically help you identify on different time frames what is the trend. So we use, the 23 exponential moving average, a 21-day simple, 50 SMA, 65 EMA, and depending on the behavior of a different stock, you might find that stock really respects one of those moving averages. And then that's the one that you really want to focus on going into the future. So whenever you look at a stock chart, you want to look over to the left and look at its behavior, look at its character. Does it really respect the 21 EMA? Does it really respect the 50 SMA? Because likely that trend is going to continue, later on down the road during the next uptrend. So knowing that in advance will let you know, is the stock acting correctly? Is it behaving normally? Or is it really changing its trend? And that's what kind of this script really likes to help you. Okay. The reversal bars, this is a newer one, and I think Ray was primarily in charge of this one. Basically, it's looking for key upside reversal bars and changes in trend. I haven't used this too much personally, but I would check it out and kind of look at a stock chart, see where these indicators pop up, and you'll kind of see for yourself what it's kind of looking for. So that's what I would kind of say on that one.
Sure, fair enough.
Yeah. All right. So would you like to walk through this chart here?
Yeah. So could we look at some Indian stocks and try to make judgment about them?
Yeah, absolutely. Is there a specific ticker, or do you want to just kind of go through the?
I think the one in the first is fine. State Bank of India, SBI. Or you can take Reliance, which is the most, the very large corporation in India. The third one. Yeah, this one right here. Third one from the top. Yeah.
Yep. Sorry. So I don't know these tickers too well, so we'll get through it.
I'm there.
Yep. Yeah. So the first thing I would say is I like to scroll back and even look at a weekly chart as well. So let's go ahead and do that actually, because it's always important to get a larger perspective on things. So longer term, this has been a really steady performer, very strong stock. It's above a longer term 200-week SMA. And right now it's just kind of below these highs, is technically consolidating, but recently it's been moving up on the weekly chart. So it's good to get that longer term perspective. And longer term, this has been a strong company that has grown over time. You can see previous moves upwards in the relative strength line, especially coming out of the 2020 correction. And that just kind of gives you that longer term context.
So
Once
when
I've
you
looked,
convert this
yeah,
into a weekly chart, your
yeah,
RS setting of daily chart remains as it is, and it now shows the weekly outperformance of the stock
yes,
versus Nifty. So,
yes, that's correct.
so is your judgment or interpretation changing in any way, or you follow exactly the same thing which you are following in daily chart?
Yeah, my view on the markets is very fractal. The same thing I'm looking for on a daily chart is the same thing on a weekly, pretty much, because
Hmm.
everything, kind of moves in sync, and the same patterns emerge over and over. So absolutely right.
Sure.
I'm looking for, big volume breakouts. You can see here back in 2017. Look at the weekly volume here, and look at the trend that started right at that point. So this is something you can really look at on a weekly chart or daily chart and notice this big character change. So that's exactly what I would look for on a weekly chart, breaking through these highs on enormous volume.
Sure. And one interesting thing which I observed, that when you change the duration of the chart weekly or 2 hourly, or the enhanced volume indicator green is
Yeah.
not there. So is it meant only for daily thing, or maybe because the average volume is not high enough for the green to emerge?
Yeah, it's more that it was designed specifically for the daily time frame,
Okay.
because a lot of
Okay.
people who use it primarily use the daily. But you can still kind of see that this is well above average volume, just
Yeah.
just looking
Yeah.
at the moving average. But yeah, that's another thing that we could definitely update in the future, is have it apply on the weekly chart. And I noticed on the short term time frames as well, like the
Yeah.
65-minute time frame, it doesn't update.
Yeah.
So
Yeah.
same thing there.
Sure. Sure. Got your point. Yeah.
Yep. So going back to a daily chart, we've got that longer term perspective. And now I would just kind of zoom into this recent area and look at, these recent highs are around 2,750. It hasn't been able to break above that. So this is kind of within a basing period, consolidation period, where the stock is kind of getting primed for another run. Recently, though, we had an undercut of these lows here. We rallied strongly from that. We're seeing some green bars pop up off the bottom here. That's kind of a subtle sign of accumulation. We've moved up from that point. We're back above all those moving averages. And then this bar right here, I would wager that this would be earnings or some kind of news event occurred on this bar, just because based on how volatile it is. But we had an initial move down. We undercut this low and then rallied strongly into the end of the day, breaking through this pivot. And that's where you could look for a potential entry point, or even as it rallied back through this high, you could look for an entry point. And so far, we closed strongly on this bar. We've got a nice consolidation bar so far here. And you can also see in the relative strength line that this day right here started a new potential relative strength uptrend as well. So a lot of things are kind of lining up here. And this also broke above this other pivot. So I'm always looking to the left and trying to find these key levels, which could be potential resistance. And this was able to break through those. So did you have a question there?
Yes. Yes. No. 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 This is perfectly fine. So basically, the setup, relative strength, price action, and volume, all three
Yeah.
speaking the same language, then you will put money, right?
Yeah, exactly. And I'm also looking for the stock making higher lows. We've got a low here, then here we're making a higher low again. This was a higher low, it got undercut, but we formed another higher low here. And I love how the stock started to kind of respect the 21 EMA area here and here. A lot of stocks, when they're within uptrends, they'll kind of respect that area. They'll pull back, but not too much. And I also like how we got back above that 200-day moving average, and a nice breakout on very large volume. And yeah, it looks like it could be the start of a nice trend, and I'd love to see it get through these highs and start to trend into new all-time highs. That'd be superb.
Okay. So how do we do position sizing in this? Suppose if I have to start building position, should I put entire money, or should I start with small amount and build new positions as price goes up, or keep on averaging as price goes down?
Yeah, that's a good question, and it's kind of dependent on everybody's own personal style, and how they manage risk as well. Me personally, I like to put in a full position all at once. That sizing will depend on the market conditions. It will also depend on how I've been trading recently as well. If the market is good and the past 5 trades have been successful, I'm going to increase my position size a little bit, press the gas when things are working. But on the flip side, if out of the past 5 trades, 4 of them have been stopped out. We're seeing the index declining. We're breaking moving averages on the stock. I'm not going to size super big. I'm going to kind of test the waters with just a pilot position. For this one, You can see that the index is now in an uptrend overall. We're back above the moving averages. Nice volume on the breakout. I would be comfortable if I've been trading well, starting with a 10% of my account position through this pivot. And then you could look to add as it pulls back into the 21 EMA in the future, or even kind of rests against this pivot for a few days and pulls back on lower volume and then rebounds upwards. Then you could add a little bit more, maybe 5% to that position if that does occur.
It's so surprising. How can two people think in a similar manner? I'm so surprised. After
Yeah.
your presentation, I'm going to show you my template and you'll be shocked that how can we think in so similar manner. Anyway, let's take some other stock. Let's talk about SDFC. So can we, okay.
What's the ticker? If you could spell it out.
HDFC. So you can just type HDFC.
Is that S?
HDFC. H. Because this has been
HDFC.
an underperforming stock for some time. Yeah, this one.
All right. Yeah, so taking a look at this chart, let's do this, follow the same process, be very methodical here, look at a weekly first. Longer term, it's been a steady grower, not super explosive. We had a really nice run back in this area, but over time, definitely trending up, and it looks like, once again, a pretty steady mover. Looking recently, it fell well off its highs here. We had some volatility here, most likely earnings, news event here. But once again, we're forming higher lows on the weekly at this point. And just kind of consolidating over the past few weeks. So with that knowledge, knowing we're well below all-time highs or decently off all-time highs, but we're making a short-term trend upward. This looks a lot like a lot of stocks in the US market as well. Let's go on over to that daily chart. All right. So we're seeing pretty much the same thing. We're forming higher lows. We're back above the moving averages. The 200-day moving average, which is kind of that longer-term indicator, is now flat to almost rising a little bit. So we're potentially starting a longer-term uptrend. And looking at the recent action, this gives me, this is pretty strong action. We got back above, popped above the moving averages. We're pulling back on below average volume, increasing on big volume here as well. And now we're just consolidating that move where once again, we're moving sideways in terms of price action. And look at the volume. There's not really much give back here. So recently, I would say this is a pretty strong stock. And the buy point, which I would have liked to have gotten, who knows if you would have gotten a chance, is pretty much through this level here or through this level here. Most likely the second one. Most likely this is earnings. I'm not quite sure based on the event, but it opened pretty much right at that pivot. You would have had to act pretty fast in the morning, and that's where that run rate can help you. You would have seen volume really pouring in, and most likely the price action was super strong, and we got a nice breakout. Beautiful close. Looks like on this day we're up almost 6%. And right now just kind of consolidating that move and potentially prepping for another move higher. So I'd basically be watching for a break of this flag or just horizontal pivots and look to add to that initial position or even start a new position if you weren't able to catch it down here. So yeah, but I love the trend above the 21 EMA. It's nice to see the 50 curling up as well. And if you're looking to buy through this pivot, you would either set your stop loss at this low right here. Oh, here we go. This low right here. Or if the 21 EMA kind of catches up to price here, you could use the 21 EMA as kind of a moving stop loss as well. That's something I like to do when the stock kind of moves up from that point. I like to trail my stop loss at that 21 EMA.
Awesome. So we'll take one more stock, the last stock. It's called Maruti, Maruti. Yeah, this is again one of the big automobile companies in India, Maruti Suzuki.
Gotcha. All right, so taking a look at this one, I would say the one I had originally up on my screen was probably a little bit stronger than this one, just looking at the price action, but let's go over to a weekly chart. And longer term, another really strong stock, super strong move from its IPO back in 2004, and then a nice move as well during this period, 2013 to 2014. But recently, it looks like it hasn't made a new all-time high since 2017. It's just been making this big base here. So it could be consolidating for another move. And recently it's kind of moving up and has tested pretty close to that level. So yeah, promising things longer term, and it could be a big base. And we know that big moves come from big bases like this. If you just look at 2013, you can see we consolidated from 09 all the way to 2004, and that resulted in this nice trend. So we'd basically be looking for a big breakout through these highs and just to ride that potential trend if it occurs. And often that lines up with a new catalyst. Maybe they come up with an electric vehicle or something like that that's super popular. And did they do that? Am I right? Or
Yes, yes.
yeah, yeah, yeah. A lot of the automakers, that's kind of been the impetus for some new moves, and developing EVs. A lot of people are looking into that, so it makes sense. So looking over at the daily chart, let's take a look at potential entry or what you'd be looking for here. So looking long term, I'd always keep this longer term pivot in mind, just over 9895. So that would be a potential area of resistance, and just something to be aware of. Shorter term, I would draw a line over from around this level, and we're basically right at that point. We had an attempted move up on a really nice volume, but I don't like how we kind of failed that and didn't really hold close to that. So on a breakout move like this, where we push up strongly on volume, ideally, I would want to see a gentle pullback, kind of sloping down here, but then be supported and move up from there. Instead, we kind of leaked below and fell back to this longer term pivot. So what I would want to see here is a breakout or move through this high on volume, and for it to push up here on volume, consolidate on lower volume, and just kind of stair step higher here. And you can see that also it's been a little bit weak because some of the other stocks we looked at we were in nice relative strength uptrends. Here we're in a relative strength downtrend where the index has been increasing and the stock has been declining. So relative to the market, this hasn't been a super strong stock, which isn't necessarily what I look for when looking for potential long positions. So I'd love to see it start to push through this 21 EMA as well in terms of relative strength. But yeah, you just basically be looking for it to rebound from this area, continue to base out and have a nice breakout, and have a pivot point where you could really manage risk against.
Sure, sure. So I have one question for relative strength, which people also ask me. Ki, if suppose a stock is relatively strong, but the market is falling, for example, March 2020, when market just fell, and you have a position in that stock, but the stock is still strong, market is falling more. What do you do? Should you still hold on to the stock and keep yourself calm?
Yeah, it's a really good question. I would say it kind of depends a little bit on your cost basis and your time frame in the markets. For me as a swing trader, if the market really lets go and starts pulling back, the stock is holding up well, I'd be very cautious about that stock. And on the first indication of weakness in that price chart, I'd probably be exiting my position just because the overall market condition isn't quite right. But if you're a longer term trader, an investor, and you have a really good cost basis and a really nice price cushion, you might want to sit through that first correction and basing period if it doesn't violate any of your sell rules. So if it's holding above the 50-day moving average, it's still a relatively strong stock. And especially you want it to hold above that 200-day moving average. So it's a little bit dependent on your style. In terms of currently, when the market's declining, relative strength is something you want to kind of use as evidence that the stock could be a potential buyable candidate later. So even if you're not buying it then, you want to keep it on a watch list, write the ticker down, and that should be kind of your go-to list when the market does turn around, because that stock has shown strength in the past. It's shown that it's been supported by those bigger funds and institutions.
Okay, cool. So can I presume that my entry criteria can have relative strength, but my exit probably can be more price action driven rather than pure relative strength?
Yeah, I think that's a really nice way to put it. Yeah, and you can also definitely incorporate relative strength in your exit criteria. If the stock starts underperforming and lagging like this, and it's in a downtrend as the market is rallying, and that happens for a sustained period of time, it might be that that stock isn't in favor anymore, or the industry or sector isn't quite as hot, and you might want to look at the opportunity cost of holding a stock that's underperforming versus looking for a new trade, a new opportunity. So once again, it's kind of dependent on how you really like to do things. I personally, once I'm in a stock, I kind of treat it on its own merit and look at its chart versus relative strength or anything like that. My exit criteria is usually 2 closes below the 21 EMA and I'm out. So that's kind of how I handle things.
Sure. Fair enough. Richard, I'd love to interact with you more, love to see more Indian charts, but obviously you have given us 1 hour and I've just crossed that limit. let me show you my template, just to,
Sure
show
thing.
you how similar we can think together. And I'm sure you will be excited to see my template as well. So here we
Yeah.
are. This is my template. This is the daily chart and this is the 2 hourly chart. So
Very
I
cool.
use 2 hourly chart for my shorter swing strategies. So for positions between 2 days to 20 days. And it's the same template I have where I have used weekly and daily here. Trading, the trader line indicator is right here. I also use relative strength, but I use a 55 period rolling relative strength. There is an indicator which actually gives you me the strength over a period of 55 period vis-a-vis the index, and I use RSI to check the momentum, short-term momentum in the market. So whatever works, it's working fine for me. And I'm going to add traders line relative strength also in my template to see if there is different information I'm getting from my relative strength.
Yeah, that's always what you can do. Try a tool out, try a new indicator out. If it helps you, it helps you. But if it just ends up being noise, you can move on and try something else. But yeah, super cool.
Great. Richard, thank you so much. It was really pleasure interacting with you, really good knowing you. And now that we are in touch, looking forward to more such interactions, learning, sharing from each other. It's a long way to go. I hope I will host you someday in India and let people
That'd be
learn
cool.
more from you and your experiences.
Yeah, thank you so much for having me on. This is a lot of fun. So yeah, that would be fantastic. I know Traderline has actually been talking about doing something potentially over in India. So yeah, that'd be awesome.
Great, great. Fantastic for you this time. And have a great evening. Good night. I think it's almost
Yep,
10 p.m. there.
yep, getting there.
So thank you so much for giving your time in the night. Thank you.
Yeah,
Bye.
of course.